The trade war between the U.S. and China escalates. Florida Republican Senator Rick Scott now calling upon the SEC to delist Chinese companies. Joining us in an exclusive interview to discuss this and so much more. It's his first time speaking out since leaving office. Former SEC Chair Gary Gensler. Gary, great to have you on the broadcast. And I'll start with what Rick Scott is talking about. How do you feel about the role of the SEC being used in the way that Rick Scott is effectively asking for?
First, it's great to be back with you, Andrew and Joe. I miss Becky, but good to see you, Kelly, and all of your viewers. Look, it's a privilege to be in the U.S. markets. We have the deepest, most liquid markets. They've been very choppy recently, as you know, because of all the policy uncertainty. But China, for 20 years, was not really following our rules. But we were successful in a bipartisan way with Senator Rick Scott. He and I used to talk on occasion about this, with a lot of success with other senators as well, negotiating with China that they behaved and they followed the rules. And we treated China with respect, but with firmness. And as long as I was there, they entered into a 50-page agreement, and they have been abiding by those agreements.
So, Gary, you've negotiated with the Chinese before. To the extent that you can try to put your head in their head, how do you see all of this playing out as it relates to tariffs?
I spent a lot of time with their Ministry of Finance and their senior financial regulators, and I think it's not going to end well, Andrew. I think it's going to be a bit of a quagmire. My experience is that they're tough negotiators, don't get me wrong, and they're looking out for their advantage. But the best way to handle that situation is to be consistent, to be honorable and treat them with dignity, and to take the toughest messages private and one-on-one. And I will tell you this, when they see inconsistency in policy, they tend to veer back. They lean back and they don't like to engage. And they sort of think that time is on their side. I'm not saying it always is, but that's how they think, is time's on their side and they can outweigh the volatility of the policy on the other side. So that's why consistency, respect, but yes, firmness is important.
In terms of leverage, to the extent we have any, how important is it to go to them with allies? Trump, Scott Bessent, Howard Lutnick, they're meeting with the Japanese today. To the extent that the U.S. can form some kind of deals with a handful of countries, does that change the dynamic? And do you think, I mean, as it relates to our other allies, that if you're Canada right now or you're the EU, that you're going to say, sure, I'll make a deal with you and I'll pay your tariff, as it relates to then going and working against the Chinese?
Look, I get on some level that, of course, elections have consequences, and this president wants to adjust our trade relations around the globe, that it's been non-reciprocal trade and wants to balance it up. But doing an all-of-the-above strategy, trying to do it with 150 or 200 countries and doing it so aggressively and so jarringly at one time is like a home field goal, a self-inflicted injury. I do think allies are deeply important, as you said, but I don't think it's going to be that easy. I think 90 days to kind of negotiate with dozens of countries, big consequential agreements, and then China's watching all this. And don't forget the real instability for businesses and thinking about their investments. They're pulling back. They have to be much more careful about their investments. And then don't forget about the deep instability in the stock market and the U.S. Treasury markets. And those are some of our considerations, of course, as our economy weakens and our markets are far more uncertain.
Let me ask you a different question. There has been lots of not just speculation, but we'll call it speculation for now, about potentially folks in Washington, government officials, maybe people in the administration, maybe others, I don't know, and whether they have been trading on or have been aware of things that this administration might be trying to do as it relates to tariffs? You're somebody who ran the SEC. You and I have talked about this topic at great length. I always thought that it would be great for the SEC to look at these things because I thought there's a way to create credibility for the government. I think you've always felt that it was harder for the SEC to do it because effectively your budget is set by Congress.
Well, Andrew, I think our capital markets work best when the public, the investors, think that nobody else has an edge. I mean, they might do better research, but they don't have an insider information edge. And that's critical. And I think trusting government similarly. And I think it's really critical that folks don't trade on inside information, particularly those, whether it be in Congress or be in the executive branch or the judiciary. That's a really critical thing. Yes, the Securities and Exchange Commission from time to time investigates government officials, whether it be in the judiciary, Congress, or executive, about insider trading. They're hard investigations, but I do think it's really critical to our confidence in our government and our confidence in the markets.
So when you see news that somebody like Representative Marjorie Taylor Greene disclosed that she ended up purchasing tens and hundreds of thousands of dollars of stock on April 8th and 9th, this is the day before President Trump made the announcement pausing the global tariffs, and then also bought, it looks like, dumped some Treasury bonds during this period. What do you think, and do you think that the SEC should be investigating what government officials are doing? Does knowing what the president may or may not do constitute inside information?
Well, I'm not going to comment on any one member of Congress and anyone.
You're not the head of the SEC. You can say whatever you want.
But I'm going to say what I want here. Okay. I think it would be best for the American public, and Congress has considered this over the years, to actually take a real look. Congress take a real look and self-impose some restrictions. We at the Securities and Exchange Commission self-imposed. We went beyond the government ethics rules and self-imposed on ourselves restrictions on people like myself or Paul Atkins, who's going to take the honor and the oath of office shortly, to trade on individual securities. We weren't able to do that. I think that's a way to better instill confidence in your government and in the markets, and then you wouldn't have these questions about individual members of Congress.
What is your confidence or lack of confidence that right now insider trading or other laws that the SEC would effectively oversee corporations are going to be enforced during this administration?
I think it's a challenge. The Securities and Exchange Commission, a great agency, when I got there, had shrunk a little bit from 4 years earlier, about 5%, and we just grew it back to where it was in 2016. They have now shrunk it considerably. It's about 20% smaller. I think that's hard. It's a cop on the beat, and markets work best when you have that cop on the beat. Just like the highways, we do need traffic lights and we do need cops. So to your question, I think the market just inevitably, when the agency's 25% smaller, is going to be less policed, less overseen for fraud, manipulation, insider trading, and things like that. And I think corporate issuers will get their questions answered a lot slower. It's a really, listen, it's part of the secret sauce of American success in our markets, and I think your viewers benefit by a fully staffed Securities and Exchange Commission.
Have you weighed in on prediction markets? You know, when they've prediction markets, super popular, obviously. We all like to look at them, you know, who's going to win president and what's going to happen, whatever the case may be. Now they're on Robinhood. You can bet on sports outcomes. It's kind of getting you close to the sports betting piece of it. But prediction markets would be kind of a fun to look. It'd be fun if CNBC could host prediction markets. You know, should we be able to? Should they be broadly legal in this country?
Well, Kelly, I used to be honored to chair another agency, the Commodity Futures Trading Commission, and we took a lot of look at that 10, 15 years ago, and I know more recently. And I think that it does help people hedge certain risk. if you're hedging a risk of weather events and you're hedging a risk with regard to non-traditional financial risks and so forth.
Can it just be fun? Do you have to even hedge a risk? Could I just spend $1 saying this is what I think is going to happen with, I don't know, March Madness?
Dictator risk? As we had in the last election.
No, I understand that. I think that it can be fun. I get it, and it can be fun. And following sports is a wonderful pastime. But I think you also have to be careful against manipulation in those markets, people being taken advantage of, and then, of course, the integrity of the game itself. Now, an important thing is the integrity of politics.
On the Robinhood app.
The integrity of politics.
The integrity of sports is unclear in the era of sports betting, so it seems that regulators have had no problem kind of letting these ships sail and trying to clean it up in the aftermath. But again, you can, on the Robinhood app, you can go do this now.
No, I understand. And these have been debates for many decades. I think that it's a balancing for the sports leagues, the balancing of bringing fan enthusiasm, fan interest in to the game, and versus the integrity of the game to ensure that it's still, fairly competed on a field of their choice. I worry about it more as it relates to politics and the integrity of politics, the integrity of picking our national leaders. And whether you're Republican or Democrat, whether you're conservative or liberal, just the importance of the integrity of our democracy.
Hey, Gary, final question for you. As you probably watched, so many CEOs were doing almost victory laps in the crypto world as these enforcement cases were dropped by this current administration of cases, of course, cases that you had brought. As you watched that, what did you think?
Look, I'm going to step back a little bit from any individual cases and just say this again to your viewing public. This is a very small part of the financial markets. But if you were interested in this, think about every financial asset sort of trades on a bit of fundamentals and sentiment. But this field is almost 99 or maybe one might say 100% sentiment and very little on fundamentals. And while something like Bitcoin may persist for a long time because there's 7 billion people around the globe, a real keen interest in it, there's 10 or 15,000 others of these tokens. And to think through your own risk, your own personal risk about where are the fundamentals, and if this is just about sentiment, then generally those don't end up well, and most then go down.
Are you talking, you're contrasting Bitcoin with the other ones, or they're all the same?
Joe, I'm glad that you spoke up because I know you're a bit of a Bitcoin enthusiast and think less well of the rest of those. It's how you and I have always connected in the green rooms. But think of these 10 or 15,000 other tokens, and just on the economics, just on the fundamentals, what are the fundamentals?
No, I know. But that was my question. You throw Bitcoin in with the rest of them, or do you think Bitcoin is different is qualitatively different than the others?
I think there's the distinction is similar to in metals, there's only 2 or 3 precious metals. We humans have a certain fascination with 2 or 3 precious metals like gold. I don't think we humans will have a fascination with 10 or 15,000 meme or sentiment tokens trading over the years.
Gary, I wanted to actually ask you something different, which is you're teaching AI now. And one of the things that seems to be happening in the marketplace is there's a lot of trading taking place as a function of AI, meaning literally AI programs are operating on the exchange. Do you look and think to yourself that a year or 2 years from now, I don't know that that literally human beings are not going to be making real decisions and that AI is going to be able to be a better investor than us?
I think artificial intelligence is the most transformative technology of our times, and it's changing so much of finance, investment management, underwriting, and trading, as you say. And I think over the next 5, 12 years, it will change and transform, as you say, a lot. Humans will still have a role, but as we put more of this in the algorithm, it will shift. One thing about trading, though, is there's also about latency. And the proprietary trading shops need to be very quick. And generally, the AI is not that quick. It's quick, but not that quick. But 3-6 years from now, I think you're right. And I think even this program is being analyzed by artificial intelligence. And I'm no longer a federal regulator, but you can bet that AI is analyzing every word of Jay Powell for his sentiment, every word of the President of the United States, and all the CEOs that you have on this TV. It's the algorithms through sentiment analysis. That's not a bad thing. It's pattern recognition. We're going to benefit as a society, but there's also big risks in the markets as we become more computer algorithm and less human.
Hey, Gary, we're going to be up against a hard break, so just one final plumbing question, actually about the credit markets, but as it relates maybe to the equity markets and as it relates to banks. I'm curious, when you look at the private credit business, the shadow banking system, how interrelated do you think it is today to the regular banking system, or at least the rest of the markets, and whether we need to be concerned about it?
I think it's a feature, not a bug, that we have significant non-bank finance in this country and that we're less focused on banks than any other country around the globe. I think that's generally been a good thing of that competition, but it's not without risk. There is definitely risk in the private credit business, and as if we are going into a recession, and many people think that that's 60% or so chance and so forth, and I don't need to requote Jamie Dimon and others. But if we're moving into that recession, private credit will be tested in a way it hasn't been tested recently.